Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
It's Friday. Welcome to Modern Investing Techniques, episode 43. I'm Patrick in Vancouver. Today is May 15th, 2026. Last trading day of the week. Let's review the week and set up for next Monday. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Bill Ackman's new Microsoft stake highlights a barbell approach that pairs AI infrastructure growth with defensive holdings, giving TFSA investors a template for balancing momentum and stability this quarter. North American indices closed higher, with the S&P 500 at 7,501, up 0.8%. The NASDAQ Composite closed at 26,635, up 0.9% on the week. The TSX Composite finished at 34,268, up 0.7%. Sentiment drew support from details out of the Trump-Xi summit and continued AI spending signals, while investors kept an eye on Iran-related developments and Fed hike expectations. The US dollar strengthened on the week, pressuring some international holdings, but supporting domestic energy and tech names. Are we beating the NASDAQ this week? The portfolio cumulative return sits at negative $4.66 across 20 trades, so we trail the benchmark by roughly 12.25% alpha on the most recent position alone. The barbell portfolio pairs a concentrated set of high-conviction growth holdings with a sleeve of defensive, income-generating names to perform across market regimes. Today's environment of elevated oil prices and selective capital AI infrastructure spending makes the approach relevant because it limits drawdowns when momentum fades while still capturing upside in data center and networking names. Implementation starts by allocating roughly 60% to 8 core positions, typically 4 growth and 4 defensive. You then rebalance quarterly using a simple moving average filter on each sleeve. Historical data shows the structure delivered lower volatility than pure equity benchmarks during 2022's rate hike cycle, while still participating in the subsequent recovery. The main risk is overconcentration in the growth leg if sector rotation stalls, so position sizing should respect a 5% single name cap inside the TFSA. Platforms such as Wealthsimple or Questrade make the rebalancing step straightforward with low-cost limit orders. If you wanted to try this with your TFSA, begin by screening for 4 names with strong revenue growth in AI infrastructure and 4 names with stable cash flows and dividend yields above 3%. Rebalance only when a holding closes below its 200-day moving average for 2 consecutive weeks. This keeps the portfolio responsive without constant tinkering. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. No new position opened today as we continue monitoring for volume-confirmed setups. The focus remains on AI infrastructure names for volume-supported entries after recent earnings reactions. Cisco closed above its 50-day moving average with RSI at 58. Nearest resistance sits near the April high, while support rests at the 20-day average. A failed retest of the 50-day average could trigger a 6 to 8% pullback. Any new entry would use a stop 7% below the trigger price. The target remains 4 to 6% on a confirmed volume surge above the 20-day average. Confidence sits at medium because sector tailwinds are clear but lack the volume confirmation required by current rules. Waiting for volume confirmation above the 20-day average prevents entering momentum trades that reverse on low participation. This discipline protects capital even when the fundamental story remains intact. Last weekly hold was ACM on an infrastructure consulting contract win that appeared to provide multi-year revenue visibility. Entry came at $80.09 on Monday open, and exit occurred at $71 on Friday close. The position lost 11.35%, or $113.50 on a $1,000 simulated stake. The infrastructure contract catalyst proved insufficient once broader market rotation favored pure AI plays instead. This teaches us to always require volume confirmation above the 20-day average before entering momentum trades on earnings beats. The running total now stands at negative $4.66 across 20 trades with a 55% win rate. Total trades reached 20 with 11 wins, 8 losses, and 1 break even. Cumulative profit and loss sits at negative $4.66. Average return per trade equals negative 0.02%. Best trade delivered 13.36%, while the worst trade lost 11.35%. Current streak stands at 1 loss, and our AI analysis continues learning from sector rotation patterns to refine future entries. The volume profile tool on TradingView overlays historical volume at each price level so investors can identify high volume nodes that often act as support or resistance. It gives an edge by revealing where institutional accumulation occurred rather than relying solely on moving averages. Active traders on the free or paid tiers can add it to any chart via the Indicators menu and set alerts at key nodes. Portfolio Visualizer lets users upload custom portfolios and run rolling window backtests against the NASDAQ to measure alpha under different regimes. The free tier supports up to 10 assets and shows maximum drawdown and Sharpe ratios, helping TFSA holders stress test barbell allocations before committing capital. Shares of the AI chip designer Cerebras fell in early trading following Thursday's strong debut. This illustrates how quickly momentum can fade once initial hype is absorbed. Avoid adding new AI hardware exposure until the stock stabilizes above its first week low with rising volume. Corporate leaders noted that renewables face fewer supply disruptions than oil-linked assets amid ongoing geopolitical tensions. Add a broad clean energy ETF such as ICLN to the defensive sleeve of any barbell allocation this quarter. The newly independent ice cream maker Magnum jumped 18% on reports of private equity interest just 6 months after its Unilever spinoff. Place a limit order 5% below today's close to capture any post-rumor pullback while keeping position size under 2% of the TFSA. Chevron and Total Energies trade at different multiples despite similar upstream exposure, creating a relative value opportunity. Consider swapping a portion of Total Energies into Chevron inside the RRSP if the valuation discount persists into next week. Now, here's something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought a Berkshire Hathaway position last quarter after reading about its insurance operations. Your shares were acquired at the prevailing market price. Yet the real engine behind the long-term return wasn't the equity portfolio alone. It was the float generated by premiums collected up front and invested for years before claims were paid. In 2025, the float exceeded $170 billion, effectively providing Berkshire with interest-free leverage that amplifies every percentage point of investment return. Most retail investors overlook this because they focus only on the stock holdings rather than the liability side of the balance sheet. The pro tip is to scan the footnotes of any insurance-heavy company's 10K for the float line item and compare its growth rate to the investment yield. When float expands faster than claims, the compounding advantage widens. The biggest misconception is treating float as free money without duration risk. Instead, always check the duration of the insurance liabilities before assuming the structure will work at smaller scales. Before we wrap, open your brokerage platform over the weekend, pull up the volume profile on CSCO, and mark the highest volume node from the past 30 sessions. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.